So the legal structure of a rollover as business startup, ROBS for short, the first step involves creating a brand new C corporation. If you have an existing C corporation, yes, you can definitely use it. However, it's simply a lot easier just to create a brand new C corp. The next step after that is creating a brand new customized 401k that's specifically built to allow private investments into private corporations. And then this 401k is customized in order to allow that transaction to take place. Now, after that is completed, we take the old retirement assets wherever they might be held, which could be in an IRA, a 401k, a 403b, wherever it might be. As long as you can access those funds and move them over, you can move those funds from the old retirement account to the brand new 401k. After we get the funds in the 401k, it's actually still never left a tax shelter. It's gone from one retirement account to another retirement account, so you're not penalized or taxed for that. It's simply called the rollover. And then after the rollover is complete to the new 401k, we do what's called a qualified employer securities transaction, which allows the 401k to buy stock in your own C corporation. So your 401k at the end of the day becomes one of your primary shareholders in your new business. But the 401k is for your own benefit, so you will still retain all the ownership at the end of the day in terms of voting rights and so on. So you might be thinking, well, how do I get out of this structure 1, 2, 3 years down the road when I want to potentially buy the stock back? Well, you do exactly that. You take money that you built up in savings and retained earnings, purchase the stock back at the increased value, and now your 401k earns a return on investment, possibly even much higher than you would in the stock market. And then your business is now successful, it's thriving, and you have a return on investment from your 401k. And then afterwards, you can change from the C corporation to an S corp or LLC because the 401k no longer owns stock. The main reason we use a C corporation in the first place is because we'd like to use an S corp or LLC, but that legal structure doesn't allow the 401k to purchase stock. Once the stock is completely bought back from the 401k, 1, 2, 3, 5 years down the road, doesn't really matter when, you can convert that business from a C corp to an S corp or LLC at your choosing. Now that you know the ROBS transaction involves a C corporation and a 401k, and your 401k buying stock in your own C corporation, after that, you can just start your business as you normally would.